both Tesla and Strategy, I think, are offering powerful new alternatives that will be obvious in hindsight, right? The EV is obvious because it's cheaper, it's safer. Autonomous vehicles are obvious because even safer and even cheaper, right? The world is going to move to that. Economics always wins, by the way. As much as you might like driving a car that's powered by gasoline and has a big noisy engine, it is going to lose out long term to something that's cheaper and safer. Guaranteed. Same thing I think with Strategy is that what they're offering is less friction, less cost, higher return, and actually safer, I think, than a lot of other bond investments, a lot of other fixed income investments. It'll be obvious in hindsight.
How many chairs are you sitting on right now?
Hello, everyone, and welcome to One Chair. We have another great interview for you today as we were joined by Cern Basher. Cern is a chartered financial analyst running his own investment advisory firm called Brilliant Advice, providing wealth management services. And he has some great insights into both Tesla and Strategy, doing some great analysis and research on both companies. So it's an interview that will be interesting for both Bitcoiners, but also the Tesla community. So let's get right into it. Here is our interview with Cern Basher. All right. Hi, Cern, and thank you for being here. It's an honor to have you on.
It's great to be here, gentlemen. Thank you for having me on. This is going to be fun.
Yeah, so as I already told you off line here, I've been following your work for quite a while. All of your shows you do with Herbert and your coverage on Tesla in general. So I thought it was super interesting when you started also talking about Bitcoin and MSTR specifically. And since we do this Bitcoin Treasury podcast, I thought it would be great to have you on as one of the most respected Tesla voices out there to have you also discuss Strategy and Tesla on our podcast.
Yeah, thank you. It's interesting because I've been following what was MicroStrategy and now Strategy for actually longer than I've been following Tesla. And both companies are an area of focus for me. I think both companies are actually more related than most people think. I see AI and Bitcoin as kind of two sides of the same coin in some regards. That AI is going to demand essentially Bitcoin. AI is not going to be happy with the current banking system, current financial system as it's currently structured.
That's really interesting. Could you dig a bit deeper into that and your background specifically, why you started publicly discussing Tesla? And you mentioned Strategy was even before that. So how did you get to those two interesting companies?
Yeah, first of all, I must admit something that's entirely uncomfortable, and that is as a financial advisor, and I hear this a lot now about other financial advisors, I thought Bitcoin was a scam. I didn't believe in Bitcoin. I didn't understand it. I also thought that Tesla was massively overvalued. I didn't understand Tesla. I didn't understand electric vehicles. So I came to this with complete misunderstandings about both companies and about Bitcoin in general. But to my credit, I spent some time. I spent a lot of time digging into both companies. And I forget exactly what the impetus was for both. I know that early on, I did have a client that bought shares in the IPO for Tesla. So that's been some time, all the way back in 2010. I thought he was crazy. I thought he was going to lose his entire investment, and I think he almost did a couple times with what Tesla did. But I think over time, I realized that Tesla was going to survive, and maybe it was time for me to really dig into the company and understand what they were doing. And then same thing with Bitcoin. Bitcoin was started around the same time as Tesla, a little bit earlier. So they have a similar, 15-year lifespan, essentially. And I realized that Bitcoin wasn't going away, and maybe I should spend some time understanding what Bitcoin really was. And I would say that Jason Lowry's work, if you're familiar with his work, Soft War thesis on Bitcoin, really helped me understand what Bitcoin really is.
You mentioned one thing at the very beginning that I have to admit I don't really understand, and Saylor talks about it as well, is that the AI will want Bitcoin. Could you elaborate on that a little bit of why that is and what you mean by that exactly?
Yeah, no, good question. And I think there's a lot of different layers to this, but one simple layer I think is if we have AI agents out there in the world doing transactions for us, doing work for us. Those agents are not going to be want to be limited by the current financial system, closed on Sundays, certain requirements for dollar value transactions, both large and small. Micropayments, for example, are very difficult in today's current financial system. So there's different aspects like that that I think AI is not really going to want to put up with. AI is going to want to find something that is decentralized, that is secure, right? And I think that AI just naturally is going to find Bitcoin essentially as its preferred system for storing value and affecting transactions. So I'm not suggesting that micropayments are going to be done on the Bitcoin network directly. There'll be other layers on top of that. But to me, it's just kind of obvious that if we are going to this new financial system that's represented by Bitcoin, AI is going to go there too. And in fact, I think AI is actually going to pull us into that world faster than perhaps we realize. So I see two of them really directly linked in that way. So those are just a couple of examples I think of sort of why I think they're linked. Again, AI is not going to be happy with a centralized financial system that we have in place today.
Okay, that makes sense. Yeah. Thanks for explaining. Getting back to strategy, you mentioned you have been following them for a long time. So you saw their evolution, right? From first stumbling onto Bitcoin because they have had a problem on their hand with melting cash in 2020, and they just wanted to have a good investment for this cash, to then trying to lever up with collateralized loans that turned out to be very risky because of Bitcoin volatility, then moving into the convertible bonds, but also there having some issues with a lot of shorting of their stock because of the ARB traders, to now their latest evolution, the preferred shares. What are your thoughts in general on those preferred shares?
Yeah, I think it is a very clever idea, and I think in hindsight we will recognize what a massive shift this risk represents. Just to tie it to Tesla, Elon always talks about how the third generation of a product is kind of the sweet spot. And I think we're seeing that with strategy, the third generation of what they're coming to market with in terms of raising capital to buy Bitcoin in the form of these preferred shares, I think is a masterstroke. And what's beautiful now for the other Bitcoin treasury companies, they can just follow strategy's playbook. They don't have to make the same mistakes. So in that sense, they have a little bit of an advantage. They're not burdened by now. What strategy has is a bunch of convertible debt that they really can't wait to get off their books. So I think this is going to be a very important development. Michael Saylor talks about how this is kind of year one for Bitcoin treasury companies, even though strategy's now been doing this for 5 or 6 years.
Yeah, and the last one of his shares he calls the iPhone moment, right? With a stretch, with a fixed dollar price and moving dividend payments.
Yeah, it is so clever that a lot of people think it's too good to be true. Right, and that's a bit of the challenge that they have now is how can in the United States, how can you possibly get a 10.5% yield on short-term money? A lot of people sort of look at that and say something must be wrong. This has to be some crazy risk. But when you actually dig into it and really understand how they're doing this and the mechanics of it, it makes perfect sense, and I think over time, they will attract a lot of capital to that investment.
Do you see any risks with this latest strategy?
Well, I think they're actually de-risking themselves. By moving to preferred stock instead of borrowing money that they technically would have to pay back. This preferred stock capital is permanent capital that never needs to be paid back. All they have to make sure is that they can pay the dividends. And even that, even in a worst case scenario, they can defer some of them. And there's some penalties if they do that, but they can defer them. And in some of the preferreds, they can actually not pay them. They're not cumulative. So they've actually really de-risked their model. And it's interesting because a lot of people look at it and say, "Well, what happens if Bitcoin goes down, 90%? Then they blow up." And it's like, "Well, okay, is Bitcoin really going to go down 90% at this point?" Right? Now, it might have gone down quite a bit in Bitcoin's early history, but back then Bitcoin was a $100 million asset, if that. Right now we're looking at 2 trillion plus. And so in my mind, the likelihood of Bitcoin having that kind of decline is kind of crazy at this point. But even so, even if it did, and even if it put strategy in some kind of duress, you also have to think that the company's not going to stand still in the event of something like that. As Bitcoin's going down, they may be able to raise some additional capital, keep that in reserve, perhaps even in cash, so that they can meet the dividend payments. There are other entities that they could borrow money from on a short-term basis to see them through. If you recall back in the financial crisis, Goldman Sachs went knocking on Berkshire Hathaway, Warren Buffett's door, right? And they sold a $5 billion preferred stock note to Warren Buffett. So anyway, there's lots of different levers that they can pull, and I think a lot of market participants sort of assume that what we see today stays in place and nothing can change. And I think that's important to keep in mind. Is that Saylor is pretty smart around this. I'm sure he's thought of all kinds of different things that they could do in the event of a massive Bitcoin decline.
We actually saw Strive with their own preferred that was just released, and they actually from the beginning are doing what you suggested, is to have some cash on hand for the next 12 months to pay the dividends, right? To reassure the investors. Do you think this is a good thing to do, or do you think strategy should be going in that direction as well?
I think right now they're doing that to sort of placate the concerns that we've heard from many investors. I think that they'll discover over time that they don't need to do that. But as they're coming to market now and positioning themselves and trying to get a foot in this door, I think it makes sense. It's part of the reason why they've offered a higher interest rate to attract capital. But we also have to understand that they're a small player. It's a bit like comparing a JP Morgan bank, right? Strategy at the JP Morgan level with maybe a smaller local bank. Right. And so if you're going to go with a smaller local bank, there's some additional risks there. They don't have as much capital as JP Morgan does. So I think Strive is doing what they need to do right now to start getting involved in this marketplace. And I think it's very smart.
Tying it back to Tesla, Tesla was one of the first larger public companies to purchase Bitcoin, famously in 2020. They have sold a big portion of that again in 21, and since then it's been very quiet on the Bitcoin front, both from Elon, but Tesla in general. They haven't really moved in any direction. Uh, why do you think that is, or what is your view for the future? I know you modeled in certain of your models, you add a Bitcoin component to it, right?
Yeah. I mean, in my dreams, I see Tesla also being a Bitcoin treasury company. Michael Saylor essentially says that every company should become a Bitcoin treasury company. Just like every company uses electricity and every company uses the internet, I think at some point this will be the norm for corporate treasuries, right? We're not quite there yet, but we're seeing the early days of that. In Tesla's case, Elon consistently is ahead of his time on thinking through many of these things. In the recent the annual meeting for shareholders, which I was at last week in Austin, Texas, Elon again mentioned that essentially he thinks that money essentially is just energy. And so if you have that viewpoint, then that leads you directly to Bitcoin because that's a secure form of stored energy, right? I think Elon gets this. He understands this. The challenge that Tesla has right now is they need their capital. Tesla is going to be embarking on building massive factories, both to ramp up production of autonomous vehicles, to ramp up production of humanoid robots. He's talking about building a manufacturing line for 1 million robots, and then 10 million, and then 100 million, and then eventually 1 billion annual production of robots. I don't know if they'll ever get there, but let's say 100 million production line. For 100 million robots, you might need a factory that's about 10 times bigger than Giga Texas. Roughly, I'm doing some work on this now, but roughly, that's the kind of scale we're talking about here to build that many robots on an annual basis. In addition to that, Elon also mentioned about Tesla maybe needing to build its own semiconductor fabs, right, alongside TSMC and Samsung. They'll buy as many chips as they can buy from those two companies, but it may not be enough. So it may force Tesla to build their own fabs. I'm sure you know fabs are not cheap. This is going to be a 25, $50 billion investment, something in that range potentially, maybe even more. Um, so Tesla needs its capital. The idea of Tesla buying more Bitcoin right now may not be the best timing, but long term, in my view, they're going to be generating so much cash from their robotaxi business, so much cash from the humanoid robots that they're going to have to find some place to put it. And I've been vocal in the Tesla community about do not pay a dividend, don't buy back stock, preserve your capital because we're heading into a world I think that's going to be massively uncertain as we head into this AI powered world. Tesla's driving the disruption, but they also need to make sure that they've got a rock solid balance sheet. And there's no better way, in my opinion, than owning Bitcoin. So that's kind of how I feel about that. I wish that they would become a Bitcoin treasury company. The only challenge is how many different things can Elon and his team do? Perhaps right now it's best to leave that to strategy and other companies that want to pursue that.
And when do you think this switch would come where they are generating so much cash that there's no way they can reinvest it into growth? Because today they're already sitting on, what is it, 40 billion of
Yes.
cash?
Yeah.
So it is quite substantial already, and it will continue to grow. When do you think this switch will happen, where they need to find somewhere to put the cash?
Well, I think it happens once the robotaxi business has, is ramping up. Um, the robotaxi business will generate massive amounts of cash. For example, from a valuation perspective, 1 million robotaxis, if they generate $25,000 each per vehicle in profit, right? And you just apply a PE multiple of 40 to that, gets you to $1 trillion of market value for Tesla. So for every million robotaxis they deploy, it's an additional trillion. This rough numbers. And that's only using a PE of 40, which is low. So the process then of 1 million times 25,000 per vehicle is going to start piling up the cash on the balance sheet. Now, it may initially, for a while, coincide with a heavy investment period, right? Of building more factories, of building potentially a semiconductor factory, terafab. Um, and so, how much free cash will there be? I think that remains to be seen. But definitely 5, 10 years from now, they're going to be producing way more cash than they know what to do with, particularly as the humanoid robots start to really generate cash.
And when you say you'd like to see them as a Bitcoin treasury company, in my eyes, there's like three levels of a Bitcoin treasury company. Level one is what Tesla is today. They put part of their cash into Bitcoin. Level two would be to put all of their cash, except what they need for short-term expenses, everything into Bitcoin. And level three is really the levered Bitcoin play, where you take on fiat debt to buy additional Bitcoin, like a Strive or like a strategy. Where would you see Tesla?
Well, I would love to see them at level 3, and the reason is that I talk to a lot of Tesla shareholders who are all in Tesla, but yet they're a little bit conflicted because they need some income. Many people are retired or many people just want some income from their investments, and right now, they can't get that from their Tesla shares unless they sell some. Now, I think if they sold some preferred stock, right, and paid an attractive level of income, that would actually attract a lot of Tesla investors who want to support the company any way they can. And I think in that case, it may allow some people to part with some of their shares and still put it basically into a Tesla preferred stock that paid them dividends, just like Strategy's doing. And Tesla takes that money and acquires Bitcoin. To me, that would be an interesting thing. Although, again, I recognize that Elon and his team have so much on their plate. I wouldn't really be expecting that, but that would be an ideal scenario in my mind.
That's fascinating. I've never thought about it this way. Yeah.
Yeah. Now, the other thing that we're seeing in the Tesla community too is some discussion around an investment in SpaceX, an investment in XAI. So until sort of that's resolved, I think that any discussion around Bitcoin treasury is not going to go anywhere.
Makes sense. So you seem to be obviously very bullish on Tesla, bullish on strategy. What is the better long-term investment in your eyes? You're looking 10 years out.
Yeah, it's a good question. I think they're both very different companies, but also very related in many ways. Is again, if you think that AI and Bitcoin are sort of two sides of the same opportunity, Tesla needs to execute. Tesla needs to move a massive amount of atoms through its factories. and create products that will change the world. They also need to develop these AI systems further than they are today. They've got an amazing self-driving system. They basically solved self-driving in vehicles. They need to make it better and better over the next few years, and they will do that. They need to figure the same thing out for the humanoid robot. At the same time, they need to build the products. And that's Tesla's strength. If you ever get a chance to do a tour of a Tesla factory, do it. It's super impressive in terms of how they make things. It's crazy. And then, of course, with their new cybercab, they're talking about potentially having cybercabs roll off the line every 10 seconds. Their current fastest cadence is in their Giga Shanghai factory at about 35 seconds. Every vehicle rolls off every 35 seconds. Elon thinks they can get it down to 5 seconds at some point. So it's crazy when you think about their ability to do that. So back to the question of opportunity versus risk. In Strategy's case, all they have to do is attract capital and buy Bitcoin and rinse and repeat. To me, operationally, that's a lot less risk. It's a lot easier. Not that it's easy, that they still have to change people's minds in the same way that Tesla has had to change people's minds about buying EVs and moving away from internal combustion engines, right? There's some work to do there. Bitcoin just needs to exist. Bitcoin doesn't produce any earnings. Bitcoin doesn't produce any revenue. Bitcoin doesn't have to worry about market share. Bitcoin just needs to exist. And so Strategy has tied their future to that. So it's very different in terms of risk profile. If you were to press me and say, which do I think has the greatest upside over the next 10 years, I think it's Tesla. But I do think that Bitcoin is less risky. I'm actually in the camp that's arguing that Bitcoin is now the new risk-free asset, and we just don't realize it yet. This idea that U.S. treasuries is the risk-free asset, I think, is one of the biggest, not scams, but just we're all fooled by this notion that the U.S. treasury is the risk-free asset. And I think that over time, we will come to realize that actually Bitcoin is the new risk-free asset. And once more people begin to realize this, we're going to see an acceleration, I think, of capital into Bitcoin, either through the preferreds or into Bitcoin directly. And that's just going to accelerate this progress that we see away from a centralized monetary system more into this decentralized model.
Yeah, I think you framed it perfectly. That's kind of the way that I think about it too, is that Tesla has a lot of work ahead of them and a lot of flawless execution. But if they do, I mean, the upside is almost limitless as well, right? And strategies, it's a bit a simpler strategy, but it's tied to Bitcoin's performance and future, right?
I think the biggest knock I think you would say on Tesla is that it's not will they do it, it's when. And Elon's famous for turning the impossible into the merely late. Right? Everybody says, "You've been talking about full self-driving cars for all these years." Well, I'm sorry, it was a hard problem. It took time, right? And I think a lot of things that are on Tesla's plate today will still take time. If they go down the road of building a semiconductor factory, that will take time to build and get up to speed. That's probably a 5-10 year journey to really do that properly.
You mentioned you were at the shareholder meeting last week. What's your biggest takeaway from that event?
Well, the first thing is you walk into Giga Texas, the size of that factory is just staggering. And I was fortunate enough to be able to take a tour. I saw the end of the line where the Model Ys come off the line and they autonomously drive themselves out of the factory over to the lot where the trucks pick them up. And then as you're walking through that line, there's Model Ys kind of on all sides and above you. And they're on these autonomous skids that move them around the factory to get all the different parts added to them. It's quiet, it's clean. You just realize the amount of work that's gone in to figure out how to build these vehicles in a way that's the most efficient, right? And again, with Cybercab, they're going to make another leap in terms of manufacturing. So I was just impressed with Tesla's ability to make things. We also saw part of the Cybertruck line, which is a very different process in making Cybertrucks. And then from the meeting itself, we've all heard Elon speak, and certainly hearing him in person, you get a sense of here's an individual that's really thought through things years ahead of everybody else. The things today that we're discussing in the Tesla community, Elon's been thinking through for years. One of the questions that was asked him is, how, Elon, did you come up with this idea that you would need about 6 billion miles of self-driving data before the product would be ready and approved by regulators? And he actually gave a very simple, elegant answer to that. And he says, well, I like to think in orders of magnitude. And he said, I'm actually thinking in terms of kilometers. So he said, okay, is it going to be 1 billion kilometers of data? And he said, that doesn't really seem like enough. Is 10 billion enough? Maybe. Is 100 billion enough? And he said, no, that felt like too much. So he settled on 10 billion, which is about 6 billion miles. And that's simply how he arrived at that number. And the amazing thing is that's exactly where we are today. They've had about 6 billion miles of autonomous data. And here we are on the cusp of rolling out the self-driving service. He thought about this years ago. And we've all been scratching our heads about how did he come up with this number? Why is this so important? And yet the simplicity of it now it makes sense and it's kind of obvious.
And it does look like they're really at the cusp now of solving it, right? Are you driving it yourself?
I
Latest
am.
version?
It's two things. I was fortunate enough to be in Austin in June on the first day of the robotaxi rollout. I was probably one of the first, 30 uh, members of the public to ride in a robotaxi. But prior to that, I have full self-driving in my Cybertruck and in my family's Model Y. So I'm very used to the software and I've seen the progression. It's an amazing piece of software. And I think if you think about Elon said at the annual meeting, he said, the killer app really is to be able to text and drive. And he thinks that they'll be able to let people do that perhaps by the end of the year. So if the public becomes aware of that, just think of the demand for Tesla vehicles and full self-driving because everybody already texts and drive, unfortunately. No one wants to admit it, but everybody does. And so that kind of becomes the killer app, I think, for this massive transition to EVs and autonomous vehicles.
Yeah, and I think global demand could also increase through that because here in Europe, I've been driving Tesla since 2015. It's still the same software, basically. Maybe it can change lanes.
I I really feel for everybody in Europe because you guys have just not seen the advancements that we've had a chance to experience.
Yeah,
And it's
and
almost unfair because the people in Australia and New Zealand, they've jumped ahead of you and that they're now on the latest version.
yeah.
So I wish that things in Europe would move a little faster. And Elon said he's hopeful that they will. Hopefully next year.
And I think if they do, this will be a spike in demand as well in Europe because, again, there's zero of this technology available today.
Yeah. And even if you decide that texting and driving isn't your thing, and a lot of people will say that it's not, the ability to not pay attention, the ability to sleep in your car while it's moving also is very appealing for a lot of people.
So switching back to strategy, the news of last week. Well, two pieces of news. We had the first European preferred stock being issued by Strategy, euro denominated, and also Stretch, their iPhone Moment, finally started to trade at around $100, and they were able to hit the ATM on this one for the first time. They issued around 26 million dollars in a week. What are your thoughts on this piece of news, and how bullish do you think that is in the short to midterm for Strategy?
Yeah, I think ultimately it's extremely bullish because through these vehicles, all their preferreds, frankly, but definitely STRC and now in Europe STRE, um, it's just more on ramps, right? It's more products for people to earn the income that they want to earn with the risk factors that they're comfortable with. So STRC, it's a nice replacement for, money market funds and CDs and bank deposits that are earning next to nothing. Yes, there's a little bit of volatility associated with it, but the extra earning potential, currently in the US, 10.5% is just phenomenal. And now we've also learned that that's actually going to be a return of capital. So actually, you don't pay tax on that income, which makes it super appealing for many, many people. So the effective tax rate for some people, or the effective yield for some people, is more like 16%. depending on what your tax rate is. So I think these products are going to be proven. We're going to look back several years from now. We're going to look back to today and say, yes, that was a defining moment for the company and also the Bitcoin treasury industry. That this creation of these preferred stocks, which by the way are not new. Preferred stocks have been around for a long, long time. They just haven't been used in this way before. And this was kind of one of Saylor's innovations. I think it's a bit like what Satoshi did with Bitcoin. It wasn't like he invented everything that's a part of Bitcoin. He just put it all together in this beautiful package. And I think Saylor is also sort of doing that. He's taking what's already existing and putting it in a beautiful package that's appealing to people. And I think that will increasingly become people will become aware of that. And I think it'll drive a lot of capital into strategy, and it'll drive a lot of capital into the other Bitcoin treasury companies that follow this playbook.
Do you see a space for all those other Bitcoin treasury companies next to strategy? Do you follow them first? And what are your thoughts around them, especially now that strategy seems to be willing to go into other markets and into other currencies?
Yeah, I think my answer to that question would be how many banks do we need in the world? It's more than one, I think, right? And ideally, the more banks, the better. It spreads out the risk. And I think the same will be true with these Bitcoin treasury companies. The more we have that follow, sound principles, sound rules, and are very careful about how they structure their balance sheet, the better. It will give people choice. It'll build up a whole ecosystem. Um, I think it'll just give people confidence if there's more than one company doing this and more than one company doing it at scale. So ideally, there should be, several other strategies. Now, can other companies catch up to strategy? I think it's going to be very difficult at this point. Right. So, but I still think there could be some very significant players develop over time, and perhaps Strive is one of them.
Yeah, it will be interesting to see how their first preferred now trades. I think it was released yesterday and it traded up nicely. It's not in the target range yet, but doing well so far. So it would show that there's room, even within the US, the same market, that if Strive is successful, it could mean that many of those companies could survive worldwide. Yeah.
Yeah, it took strategies preferred to trade up to their par values, in some cases even beyond. It just takes a little bit of time for the market to accept it. Um, Anytime there's a new product on the market, it just takes time for people to analyze it and review it. I talk to a lot of financial advisors who aren't even aware that these strategy preferreds exist and just haven't taken the time yet to really dig into it. So that's just a process, and I think that'll happen over time. And certainly as these products get seasoned, that also helps to have some trading history and say, look, here's how these traded. When Bitcoin went down, here's what happened to these investments. Here's the volatility. Here's all the associated risk statistics for these investments. The more time that elapses, the better off those investments will be and more attractive to more investors.
You obviously are bullish on the whole Bitcoin treasury space. And you've mentioned now Strive. Is there anything outside of the United States, or are any other Bitcoin treasuries that you're following a bit more closely that have piqued your interest?
Yeah, I think rather than answering your question specifically, what I'd like to say is that any company that's following Strategy's playbook, I think has a good chance at being very successful, i.e., going down the path of the preferred securities. And I think there is an opportunity, for example, in Japan for a company to be a major player in that market, and probably there'll be several ultimately. And I think the same thing in the UK. I think the same thing in mainland Europe. Same thing probably in Canada and other nations. Um, and I just think we'll see that develop over time. Again, I go back to my answer to your question, which was a question: how many banks do we need in the world? It's definitely more than one, right? And I think it's the same thing here. I also see this, as I mentioned, when we're talking about Tesla, as an opportunity for supporters of a company to help a company in other ways, right? You can, if just pick a company. If you've got a very capital intensive company, let's say you've got Meta, right, who's building all these AI data centers. and you want to attract capital, I'm not sure if they need to, they probably don't, but if they did, this would be one way for shareholders of Meta to support the company in its build out of AI. And I think it would be a potentially fairly clever way. Now, the problem with that is if they're using that capital to build AI data centers, then it's not really a Bitcoin treasury company, but maybe there's an opportunity for some hybrid approaches here. And we'll have to see if that happens. But certainly the cleanest way is to just sell these preferreds and buy Bitcoin with 99% of the capital and just keep rolling forward. Now, I know a lot of people get uncomfortable when they hear that because they say, well, that's the definition of a Ponzi scheme, right? But what's really happening here is we're going from one monetary system to another. And if you believe that, then this makes sense. If you don't believe that, then this does feel very strange. So let's just sort of have a thought experiment here for a second. Let's say we were on a monetary system where we all use seashells, right? And it became very clear that there was something better out there. Well, wouldn't it be a good idea if you can borrow in seashells and then invest in the new monetary network, whatever that might be? Maybe it was fiat money, right? Seashells were plentiful. You could dig them up anywhere on the beach, and you can bring them anywhere in the world, which is exactly what happened in some places. And I think we're seeing the same thing now with fiat currency. It's very clear that governments have abused the privilege of printing money, and we have a better system. There's a lot of resistance to that still, but clearly it's happening. We're seeing this transition happen now.
Absolutely, and here in the podcast we've mentioned as well that these preferred shares, obviously you might think it's a Ponzi, but it can be seen as the product that is being sold to the customer, and the customer in this case would be the investor. So it's obviously a little bit blurred, but at the end of the day, it's an operating company providing products which happen to be the preferreds, right?
Yeah, it's not unlike any other sort of financial company, whether it's Morgan Stanley or Goldman Sachs and different products that they put in the marketplace. It's funny because a lot of Tesla investors will sort of approach me and say, "Well, I prefer to invest in Tesla because they make real products," right? As though financial products are bad, but all of us have financial products. All of us have a bank account. All of us have to put our money somewhere. And maybe fine, you want to put all your money in a company like Tesla or companies like Tesla that make real things, fine. But we also have to recognize the importance of a strong financial system. And that's actually one of the reasons why the United States in general has been massively successful is because we have a very well developed capital market, right? And I think what strategy is doing again is furthering that. But there's also an opportunity for other companies in other parts of the world to replicate that. Don't just let the United States capture it. Build Bitcoin treasury companies in your home markets. There's an opportunity there.
And some of our guests mentioned, and I think it's important to reiterate, is that those Bitcoin treasury companies, at the end of the day, if Bitcoin is successful, they will be massively good for the world in general, because as they infiltrate the indexes and every pension fund invests passively into those companies and gets Bitcoin exposure at the end of the day, right? And if Bitcoin is to be successful, it would be better if it's distributed to as many people as possible, right?
Yeah, I agree with that, and I think that that's sort of why I've been maybe quietly advocating that Tesla become a bit more of a Bitcoin treasury company as well, at least in some aspect. Although again, I'm not sure the timing is quite right for that yet, but at some point, companies that are already in the S&P 500, for example, there's an opportunity there. I do think it's just a matter of time before strategies added to the S&P. And there are already many index funds that invest in strategy because of the way they construct their indexes. Not everybody uses the S&P. There are other index funds that just track, different kinds of benchmarks. Um, and so that's already happened to some degree with strategy. But certainly being added to the S&P is kind of the gold standard here in the US. And I think it's just a matter of time.
So our last guest was Soleil from the MSTR True North crew, and he's also following Tesla quite closely. And he had a lot of great analogies between MSTR and Tesla. And one of them was that
that Tesla is creating a killer product per category, and that strategy is doing the same with the preferred for the different buckets of the fixed income markets, right? Can you think of any other analogies between the companies? You mentioned also the three iterations to finally get a great product, right? But anything else that comes to mind between strategy and Tesla?
Yeah, there's a few things. I think visionary leadership. Clearly, Elon is a visionary leader, probably on a level above almost everybody else. But I think Saylor is as well, and I think we will understand that over time. That'll become clearer. Um, they both have disruptive business models. Tesla is actually in a position to disrupt so many industries and companies. It's kind of crazy. And I think that strategy is going to disrupt the financial system of the world, which is a pretty major disruption by itself. Um, both companies also seem to have all these valuation debates, right? There's a big camp that says Tesla is massively overvalued. Oh my gosh, it's trading at 178 times earnings. Blah blah blah. I have mentioned that using a PE multiple is a horrible way to value a company, particularly a company that's got a hockey stick of growth ahead of it. And you can just use Nvidia as an example, right? Before they really started to sell GPUs, people were worried about the decline in their gaming chip business. The stock massively sold off. Jensen said, well, this AI wave is coming. And by the way, it's like knocking on the door. But investors ignored that and didn't look forward enough. They were too focused on the short term. And we're seeing the same thing with Tesla. And we're now seeing the same thing with strategy. People are not focused on a little bit longer term opportunity. And part of the reason is that Wall Street is very short term focused. Wall Street operates basically on a bonus system where they get a bonus for this year's results, and then they begin looking into next year. And that's about it. They are not really rewarded for looking a little bit longer term. And I've said that individual investors don't have to play that game. You can ignore all that noise and you can position yourself 2, 3, 4, 5 years out and focus on the companies that are going to do well in that time frame. And that's where the opportunity is. Anyway, and then the fourth thing is both Tesla and Strategy, I think, are offering powerful new alternatives that will be obvious in hindsight. Right? The EV is obvious because it's cheaper, it's safer. Autonomous vehicles are obvious because even safer and even cheaper. Right? The world is going to move to that. Economics always wins, by the way. As much as you might like driving a car that's powered by gasoline and has a big noisy engine, it is going to lose out long term to something that's cheaper and safer. Guaranteed. Right? It might be messy to get there, but we will get there. Same thing, I think, with strategy, is that what they're offering is less friction, less cost, higher return, and actually safer, I think, than a lot of other bond investments, a lot of other fixed income investments. It'll be obvious in hindsight. So the two companies, I think, are very similar in that regard.
I think that's a great way to end this, unless you have something else you want to discuss with us.
Well, I think that there's a lot that we could discuss about both companies, but I think kudos to you guys for recognizing the sort of the similarities in these two companies. I find that a lot of investors can only focus on one. I found a lot of Tesla investors who are not interested at all in Bitcoin. And it's kind of interesting because you've got a visionary leader in Elon that is changing the world, and Bitcoin's doing the same thing. To me, they're brothers in arms in that sense, right? But anyway, I just thank you to the two of you for bringing this to people's attention, because these companies are not so different in many regards, and I think it's important for people to think about that.
I think you're absolutely right, and I see this year, because I've been following both communities for quite a while, and this year it seems like there's a convergence of the two communities. So it's very interesting to see.
Yeah, I hope that continues. I really do. I think that both communities can learn a lot from each other. And I think we're both on the same side, right? That both communities are heading in the same direction. We're not going to get a new economic system if we don't also change money. AI and robotics are not going to be happy in the current system of money. So that actually is an important problem to be solved. And I think Elon recognizes it. And hopefully he recognizes he doesn't need to get involved in changing it because there's other players like Strategy and other companies that are. Where Tesla gets involved is where they think that no one is making the changes that are necessary. Right? They build their own lithium refining plant, things like that, right? And potentially their own semiconductor fabrication plant. But again, if they do see an opportunity, if they do have the bandwidth to become a Bitcoin treasury company, I think actually that could be very good for Tesla as well in terms of helping their shareholder base, because a lot of their shareholders at this point are looking for some income. And I'm sure they would prefer to stick with the company rather than go elsewhere.
No, thank you so much for the time and also for everything you do, because I only started following the Tesla story recently for myself, and it's partly thanks to Quentin, but he also mentioned you, and then I've been looking at it, and I've been a Bitcoin maxi for forever. So I've been holding only Bitcoin and have maybe had a narrow view, but now I'm starting to see the possibilities with AI and Tesla and Nvidia and so on. Now I see and start to understand a bit better.
Yeah, it does create a little bit of a problem because it's a bit like having two children that you love. Which one do you love better? Right? No one is going to publicly admit which child they may love better, and they shouldn't. And I think that a lot of investors now are conflicted when it comes to an investment like Tesla and Strategy. Which one do they love better? Um, there's no right answer to that question.
The good thing you can have both. So
That's right.
that's a positive.
Exactly.
All right. Before we wrap up, where can people find you?
The best place to find me is on X, and it's simply my first name and last name. So Cern at Cern Basher.
So, well, thank you very much. It was a fascinating conversation. I learned a lot, and I hope our viewers will appreciate it too.
Thank you for having me on. I really enjoyed it.
Thank you, Cern.
How many chairs are you sitting on right now?